Good morning, trading room, for a quick market update. I'm going to dive in right away. If you like the content channel, keep on subscribing to it. I will give you daily updates on the markets. We are trading 4 markets, the 4-hour chart. So for everybody that has no time to be a day trader and sit in front of the desk all day, or even doesn't want it, or maybe, trading the 15 or 5 minutes chart, it's a different, thing to do. So everybody has to specialize in their preferred ways of trading. We here like the relaxed way of trading. We want to sit as little as possible in front of the desk and in front of the charts for signals, and just go on with our daily lives and still be profitable and be trading the markets. Okay, let's get started. S&P. The S&P actually shows some life after quite some time of here consolidation. We had this up move, the daily chart. We have the 4,000 level here, where the market is bouncing back and forth. Now we have a beautiful strong up bar from yesterday. We had this up bar on a Friday, I think last Friday, not Fridays 2 weeks ago, and then we have this consolidation. It's like a sort of flag scenario, and now we have the daily bar actually didn't close. Let me show you that. Okay, so be cautious here. The daily bar, the yesterday daily bar didn't close above the high, correct? So yes, it shows strength, but remember all these movements, this range I will show you on the 4-hour chart, that it could easily use snapback. But the market always can do all kinds of things. So, the main scenario is this, up move here. This was this initial push. Then we have this consolidation. And yesterday, finally, we see some continuation. This is the most likely scenario. And you could trade it like if you enter the market basically at the breakout, right? We are trading more like we have this up move and then we wait for the pullback. So you can go even a little lower, minimize your risk. Let's say you would enter here at the 4150 level and have your stop below the 4110. You're minimizing your risk rather than now jumping into the market here. You're already like, losing 20 points. But if you want to be aggressive and you want to be, in the market, then now maybe it's the time to do that. The market also could just, move back down from here, or, go sideways. S&P, at least, we see something going on. It was quite boring the last couple of weeks. Okay, next market, the gold. The gold actually chart is, showing us what we wanted to see. We were waiting for this pattern to evolve. It was the A, and it was the B, and the C is the size of the A. And look at that. This is where the market is right now. We entered the market yesterday already long on the end of the C wave, which is mainly the size of the A wave, right? So this is a C entry. It is quite a aggressive entry. It's maybe not the best signal, but I just wanted to try it out because I was talking about this scenario for quite some time, and I want to trade it. So that's why I'm in it. And the thing is, because I'm saying it is an aggressive entry, because we have this resistance here above the market right now, so it has to push through all that, and the market tends to, you know, go the direction of the least resistance. So yeah, I don't know, let's see how it will play out. I'm, you know, trading my system, and the system is giving me the C entry, so this is what I do, and let's see if it plays out. Let's move on to the euro. Yeah, we were in this trade. We were trading the euro. Let me show you. But we got stopped out. You know, we entered the market on the last low. We had to adjust it. For more information, you can check out the video from yesterday. We entered here on this little dot on the pullback to the last low, and then we're able to cut something out of the market. We had then to move lower, and we put the stop on this little green indicator, which is the parabolic indicator, and that moves, you know, quite close to the market. I wanted to be aggressive, so it took us out at 1.05858. Yeah, I wanted to be aggressive with the euro. It is trending really nicely. I could have stayed in and be a little bit more, yeah, patient, but I wanted to, first of all, I had a small losing streak, meaning my equity curve is going down a little bit. I mean, still doing well, but you know, as soon as the equity curve is, you know, going down, we have to adjust our way of trading. And I wanted to cut out something, especially after already we see this bigger move to the downside. This is where we cut out. We entered the market here, and we cut out this little piece here, which is okay. Now, of course, it shows more downside, but yeah, I wanted to be yeah, quick. I wanted to get out quick to see the market. You know, you never know, it might rise again. So this scenario here, of course, most likely scenario with the trend would be the down move, sideways possible, also possible up move, but most likely scenario is the down move. Last market is the German DAX, and the same thing here. We are at the 4-hour chart, looking at the 4-hour chart. Guys, like and subscribe if you want to get more content, if you want to get the daily technical analysis updates. If you keep on subscribing, I appreciate it. Yeah, the DAX in this uptrend, and now we're breaking out of this zone. You know, I was in this trade as well. Then I was a bit too aggressive, you know, scaled into the position, and I, yeah, got stopped out, breaking even. But yeah, I was expecting this move after, you know, basically the continuation of the uptrend. So let's see how things will develop, and maybe we wanted to go long on, let's say, after the breakout. Maybe we want to go long on this pullback to this level here. You know, let's say the market goes up a little higher, then comes back down. Boom, this is where we would think of a long entry. But we also we can also trade, you know, the breakout. It is more aggressive because the market obviously tends to come back. But let's see if there's something going on. Something is going on. I mean, we see a bullish, you know, momentum in the market at the moment. I mean, at least in the S&P and the German DAX, as well as Nasdaq and you know, the Dow. So let's see if this will continue. It looks good, but you know, after seeing all this kind of back and forth in the S&P, we are a little, you know, a little more cautious, and because we are still, don't forget, and this is what I think is most important, we are still in this range. Yeah, we didn't break out of the range yet, and the market wants to go higher. It tells us, hey, I'm ready, I want to go higher, but until we, you know, to the 4,200 level, until we don't see any breakout above that, you know, if you trade now long, you are at 4,170, and let's say the target has to be above this high, which would be 4,205. Yeah, so you need to see a breakout, right, in order to have a nice risk reward ratio, because your stop would be around 60 points lower at 4,110. Yeah, so that's a one-to-one trade, which is not really interesting, you know. You wanted to see the market, you know, really breaking out here, and this is still ranging, and it can happen. We are a little bit above the middle of the range now, but yeah, not a real strong signal here, and yeah, you could go long, but it is an aggressive thing to do. Okay guys, keep on subscribing to the channel. I appreciate it, and I talk to you guys tomorrow with some new updates and see what the market did. Okay guys, thank you so much. Bye bye.